Hi everyone and welcome to this video. I'd like first of all to welcome all of you. Thank you for joining us. I hope that you can hear my voice clearly so that we can start the webinar of today. So let me check if you can hear my voice clearly. Okay. So the webinar of today is going to be, I'll be covering today one of the most important things that you must study in the FX market. Something that has to do with trading, with finding the most suitable points where we can enter the market. So the idea is that we want to try to find the best place or the best area where we can enter the market. So this could be done through many different ways. One of these ways is technical analysis under its very many categories. Like, for instance, there's something that is called price patterns. There's something else that is called trend lines, maybe support and resistance levels, Japanese candlestick patterns, and so on and so forth. So we have many different things that can be used to understand what's happening in the market, to interpret and to expect the future movement of the market very easily. Now, this takes time so that you are able to have trained eye, so you can catch these patterns from the chart. You know what I'm saying? So you can find the pattern on the chart, and you're gonna interpret the pattern itself, and then you would come up with 3 different points. The first thing is called something that is called entry point, which could be used to enter the market. And then we can find exit points that are broken down into 2 things: getting out of the market with a profit or getting out of the market with a loss. So getting out of the market with a profit, this is called take profit. Getting out of the market with a loss, this is called stop loss. Just as easy as this. Okay. So what is or maybe in other words, what can chart or price patterns tell us? What can they really tell us? They are really very easy patterns, and there are many patterns in reality. But the thing is that when it comes to trading, I only depend on 2 patterns: double top and double bottom. Okay, so it goes this way. A price pattern is a pattern that consists of different lines. It has different shapes. A price pattern would have different shapes. Maybe one is bullish, maybe one is bearish. Based on this, you can enter the market, you can trade properly. So this is everything that you need to know about price patterns. So they are simply price patterns are price structures which have been established over time and studied and are identified as leading to tradable outcomes, which means that you can use them to find opportunities, high probability opportunities with high potential, very high potential. So you can simply make winning trades. Now, I'm not saying that you would not find like losing trades. You would, this happens and this will happen. So I'm saying that uh, the overall journey or of your trading journey would be positive. Maybe if you, out of like 10 trades, you have like 6 or maybe 7 trades, winning trades, this is okay. But you have already lost uh, like 3 ones, and this is acceptable as a matter of fact, to be honest. But the thing is that you wouldn't be able to make like winning trades all the time. It doesn't go this way. In your journey, you would face losing trades that would not work for you in your favor. You know what I'm saying? So do you, I mean, do you have anything to be clarified before I carry on? Okay. So let me carry on. In this very case, for saying all of this, I would say that I would mainly depend on two main patterns, double top and double bottom. So how does it work? Let me first of all share my screen with you. Okay. So now we know the definition of price patterns. They are formations. They are price structures that would show up on the charts. And based on them, they have many different shapes, different formations. They would show up on the chart, and based on them, we can enter the market. We can have 3 important points: entry point, stop loss, and take profit. So first of all, I have double top. This is the very first pattern. And we also have, on the other hand, we have double bottom. Okay. So let's define these two patterns. First of all, we have a bearish pattern and a bullish pattern. This is bearish. Double top is bearish, and its turn. And double bottom is simply bullish. So what does it mean to have a bearish pattern? It simply means that you can go short, you can sell after the pattern has shown up. Bullish pattern simply means that you can go long, you can buy after the pattern has shown up. Okay. Now, before I carry on, we must understand the structure of the market, how a trend could establish. Okay. And what are the components of any trend, whether it's an uptrend or a downtrend. Now, it's all about the fact that we are having peaks and troughs. Okay. So peaks and troughs are simply what make the big movement in the market, whether this could be found on the 1 minute or 5 minutes or maybe whatever, or the weekly. It doesn't matter. So we have something that's called peak. Peak is simply the highest part of this inverted V shape. So this very point here, this is called peak. On the other hand, we have something that is called trough, which is this point here, the lowest point here. This is called, you can call it like low, and this could be trough, and this one is called high. This equals peak. Many different names, but the same thing. Okay, so peaks and troughs. Now, if you have a series of peaks and troughs that are going upwards, this is an uptrend. If you have a series of peaks and troughs that are going downwards, this is a downtrend. On the other hand, if peaks almost at the same line, the same level, and troughs at the same level, this is called sideways, which means the demand and supply are in balance. Okay. This is simply how it works. Let's go back to the previous page. Okay, there you go. So based on this, I would say that the double top consists of 3 points. Okay. Peak, trough, peak. This is the key to understand how it works. So we have peak or high, low, high. See? High, low, high. On the other hand, bullish, the double bottom is simply the opposite. We would have, in this case, we have low, high, low. This is simply how it works. Okay. So in this case, I would say that the easiest way so that you are able to catch these patterns on the chart is that you would imagine as if you're having 2 letters in English. So this is how it works. If you have like something that looks like M shape, okay, it can go any larger. So this is double top, or double bottom on the other hand is W, or an inverted M. It's okay, the same thing. Okay, so this is double top and this is double bottom. It's something that looks like this. Now, when you look at these 2 letters, you're gonna find that the 2, look at this. This could be, maybe I want to draw it here. Okay, here, like this. Just a minute. Okay, just like this. So here we have what we call high, low, high. Look at this. So here we have this, just a minute. We have high and we have low here and we have high, see? And between these 2 levels, between the high and high, there is a low. Just below the low, you're gonna, you must draw a line, a horizontal line that looks like this. Okay, and this is gonna be your entry point. After it is broken, after the breakout of this level, you can go short. See? So after the breakout of this level, you can simply go short. Keep in mind that we're having here high, low, high, right? High, low, high. Now, the difference between the high and low, the difference between them is going to be your take profit. Say that the difference between this point and this point is like 100 pips. So after the breakout, you're going to go short like 100 pips. Maybe 80% of the final target would be okay, because most of the time the final target would not be hit. So maybe to be in the safe side, I would go like 80% of the final target. So it's going to be like 100 pips. I'm going to go like 80 pips. This would be enough. Okay. And keep in mind that these two peaks could be at the same level. Maybe one of them could be a little higher, maybe a little lower. This is okay. It doesn't have to be very accurate. I mean, there is a margin of error here. So if one of them is a little higher, a little lower, this is acceptable. Nothing wrong with this. But keep in mind that the breakout of this low that is between the two highs is going to be your entry point. As easy as this. See? Okay. Now the same thing could be done when it comes to double bottom. Sorry, but the other way around. So here we go. We have low, high, low. Nice. And we have a just like this, we have a double bottom. So it looks like this. Okay. Just like this. So just like it looks like a W shape, right? This is how it works. Okay. So here we have low, high, and low. And between them, we have the high. So I'm going to draw here a horizontal line that goes like this. See, after the breakout of this level, I would go long after the breakout, just like what we've done with the double top. Okay. Do you need any clarifications before I carry on? So guys, the implementation of this pattern is really easy. The thing is that it takes time. So you have like a trained eye that is able to catch this pattern on the chart. This simply takes time. Just like everything else, if you are to learn how to drive a car, a new car or something like this, this is your first time, and this is your very first manual car, you're gonna have like shift pedals, you're gonna have gear, transition, manual gear transition. So you're gonna have like mirrors to the left, to the right, at the middle. So there are many things that you must learn. And maybe if this is if this is your very first time, this is gonna be really difficult, and you will feel as if that you're losing control of your mind. You can't concentrate on everything. So this is normal. Nothing wrong with this. This is how our brain works. Okay. So the same thing could be said here. I'm going to go long after the breakout of this confirmation line, or this level between the two levels. And my target would be the same the distance between the low and high. And that's it. So this is from this is the theory, theoretical part. Let's go to our practical part. Okay. Where we will be covering this. Okay, so any questions on this before I carry on? No questions? Okay, let's carry on. Okay. So guys, let's go to our charts and see what we have. I'm searching for a pattern. Okay. Now I haven't prepared anything. I'm just showing you. Okay, maybe this one. Okay. So there you go. Here we have double top, peak, trough, peak. And this one is broken. Then the pair goes downwards very sharply. See, and it did hit the target, as you can see. So just as easy as this. This could be done on any time frame, on any currency pair. It's up to you. Here, for instance, we have double bottom gold. See, after the breakout, the pair went upwards very sharply, just like this. Okay, guys, so that's it. I hope that you have learned something new today. Please let me know if you have any questions. I'm done, anyways. Okay, so since there are no questions, I hope that you have enjoyed the webinar today. Stay tuned for our upcoming webinar, and bye for now.